Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Fresh highs. Asian stocks extend their rally to a fresh record as a rebound in tech gathers pace. Alphabet borrows big. The Google parent raises $20 billion in a U.S. bond sale as part of a global fundraise for its AI spending plans. Plus, dollar dominance. We hear from IMF Managing Director Kristalina Georgieva on why she believes the greenback will retain its preeminent position. Well, it's just gone 9 a.m. across the Emirates. It is 8 a.m. over here in Riyadh. I'm in Saudi Arabia today, bringing you up to speed on the latest in markets and other stories we're watching out for. And with that in mind, let's take a look at how markets are doing, because we are seeing a rebound of sorts. So let's start with the handover coming from Asia Pacific. What we're seeing is quite a robust price action there. The index is up 1.2%. The Nikkei really at those record highs post the elections, the landslide for Takaichi over the weekend. So that's been propelling a lot of those stocks higher from Asia. The handover pretty positive. Over in the US, you can see as well S&P futures trading sideways. But again, the theme is one of a rebound given the massive tech or software as a service Armageddon that we had last week. And we saw all of those names actually squeeze back. I'll get to that in just a moment. Keep a close eye on U.S. data. We have the jobs data to watch out for tomorrow as well in the U.S. So that's going to be a big driver for market sentiment. And then Brent, we have just shy of $69, about 0.2% weaker today. All eyes once again on the geopolitics, specifically in this part of the world too. We know that Israeli Prime Minister is traveling to Washington to meet with President Trump tomorrow. So let's see what comes out of that discussion and whether, again, the first round of discussions between Iran and U.S. can yield to something more substantial. So park that for now. But basically, Brent has got a bit of geopolitical premium at $69 in it. And then gold stabilizing. It's talking about precious metals on a day where they're actually only down 0.5%. And recently, the volatility has been quite outsized for both gold and silver. But today, we see gold sort of stabilizing around that $5,000 mark. But let's switch over and talk about one chart that caught my attention today. And this is specifically around the price action that we got last week, because the moves were so vicious. And you can see quite clearly from this is a chart that our colleague Anthony Stevens sent us, that take a look at the unprofitable tech index. So that is the white line over there. For a while, investors were shorting that index quite heavily, but then we saw a massive short squeeze back again. And it's not just for unprofitable tech, i.e. tech that's not making a profit yet, but all of the most shorted stocks that are tracked by GS have also squeezed back. And what does this tell you? That this is essentially a short squeeze. So people were caught the wrong side of the rally that we've witnessed over the last couple of days. So it's very difficult to be short out there, is what the markets are telling you. We'll talk more about that shortly with our first guest. But for now, let's also check in on how markets in Asia are faring. Min Min Lo is standing by.
Hey, Jomana, that short squeeze there, the tech rebound in the U.S. certainly playing out in Asia as well, especially among the tech-heavy indexes in Taiwan and Korea. But here we're taking a look at the Nikkei because it's still enjoying that post-election glow. We're talking about 2.4% gains in the Nikkei. It's leading gains in Asia, and even the yen as well, not sliding as expected on the Takaichi win, is gaining 0.4% against the U.S. dollar. That's after Takaichi had reassured markets that is going to take a more pragmatic approach when it comes to fiscal policy and pledging not to issue new bonds to fund some of her sales tax cuts, for example, and the 10-year yield as well pointing down. So the bond market also doing quite well today. So everything is looking good for the Nikkei. But what else is moving markets? Really the Chinese holdings of US Treasury, because we're hearing from sources that Chinese regulators are quietly asking some of its largest banks to trim the positions of US Treasury. And here we are at close to 2008 lows when it comes to Treasury holdings. So some people are saying maybe don't read too much into this because it's been going on for a while, but still it's just another signal in the market right now that perhaps there are growing doubt around whether or not US Treasuries is still a safe haven asset, especially with the dollar slide that we've been seeing in January.
Min, thank you so much. And obviously a really big story. We're going to circle back to that later vis-a-vis China and their US Treasury holdings. But as you were just saying, the US tech rebound is gathering momentum. And this after a week where there were so many concerns about over capex spending in the AI space. To discuss this and more, really happy to say that Charles-Henri Monchau, CIO at Banque Syz, joins us right now. Charles-Henri, it's always good to chat to you. I remember the mantra from a couple of years. Don't fight the Fed. I guess this time around it's don't fight the tech.
Yeah, so we have seen investors rotating out of tech into other sectors since the start of the year. And yesterday indeed was a kind of relief, or at least some short covering rally. I think there are two spaces within tech that we need to look at. One of them is the Max 7. They have been under pressure, but yesterday, of course, the fact that the Alphabet bonds got 6 or 7 times oversubscribed was a relief for investors, because they told themselves, well, the Max 7, they need a lot of money, but it seems that when they come to market to issue bonds, well, investors love it. So that's good news, and this is why we saw this rally on that part of the tech. And then there is the software side, which is the one which is disrupted by AI, which is heavily shorted by hedge funds. And yesterday, after so much of a pullback for this segment of tech, there was indeed some short covering, but that's still very low compared to the drawdown we have seen on that side of the market.
Yeah, and let me just ask you though, do you think this is your classic short squeeze, or is the momentum actually sustainable?
Well, I think we're going to see now some distinction between the winners and losers of AI within software. There are two kinds of software companies. The one which needs human interactions. So think about CRM. So here, the revenues are made at license per seats. So obviously, if human is replaced by AI agents, you're going to see more downside on the revenue expectation side. So that part of the software might be a loser. And then you have other type of software, which are basically software boats, so already with robots. And these ones, they're going to benefit from more AI agents. So the more we are going to see AI agents, the more that part of software are going to see revenue increasing. So after the fact that the whole software space have been coming down, we think that at some point the market will make a distinction between the winners and losers, and that's going to become very interesting.
Yeah. Let me ask you, when you talk about diversification, are you also talking about perhaps maybe geographic diversification as well? So not just exposure to the US in the portfolio, but other markets too? And if so, what are those other markets?
Yes, exactly. So this rotation, rebalancing is one of a big theme for this year. So not only we see non-tech cyclicals outperforming cyclicals within the US, but we also see emerging markets outperforming the US. Look at Asia, for instance. Asia has become a big AI play. That's the case, for instance, of Korea. And then we have Japan, which is interesting with this Takeshi trade, where I don't think there is any G7 countries where we are seeing leaders with so much of hands on the lower house than Takeshi. So there are indeed other places than the US, and we see this since the start of the year, that indeed international markets are outperforming the US, and also within the US we have value outperforming growth, small and mid caps outperforming large caps. So it becomes a much more interesting market than the last 2 years.
Yeah, how are you thinking about the opportunity set in European markets here? And again, you know, we've been watching the currency very closely as it sort of creeps back up to 120 again. Does that derail perhaps some of European growth prospects this year?
Well, two things on Europe. First, there is a big halo trade, H-A-L-O, globally, which means halo for heavy assets, low obsolescence. In other words, consumer staples, energy, materials are doing great because they are the ones which might be less disrupted by AI and also which are cheap. So that applies to the US, but also you find a lot of these sectors in Europe. So you can see that this part of the market is doing okay. And then we think that one interesting trade in Europe might come in a few weeks or a few months' time if the euro starts to weaken against the dollar, because that could be an opportunity to come back on some of the sectors which have been hurt by the fact that the euro was too strong. Think about luxury, for instance, which might benefit from not only a euro weakness, but also if China demands come back. So that could be a very interesting tactical opportunity later this year on Europe.
Yeah, well, Charles-Henri, I'm going to put you on a spot with the question, but that's really, I think, quite topical. We've been talking a lot about central bank independence in general, and now we know we have Kevin Warsh as the official nominee to lead the Fed chair. There was a surprise announcement yesterday out of the Banque de France that Villeroy du Gallo is stepping down. It's an opportunity for Macron to perhaps appoint his successor. How are you thinking about, what this could mean for the trajectory of the ECB in terms of who could replace du Gallo?
I think it's going to be very normal and usual process in terms of replacements. It's true that his departure was unexpected, but we think that the ECB will remain, let's say, as independent as it has been the case in the past. I think we know that in their case, the mandate is more simple than in the US. It's first and foremost about inflation. Not about also the job market. So we think that here there are also the European dimension, that there are many countries which are involved in the process. So we don't think that there is any change taking place on that side. I think that the markets is much more concerned about what will happen next in the US with the appointment of a new Fed chair and also the board's membership for the FOMC.
Yeah, so many big questions around the direction of monetary policy as well and what it all means. Charles-Henri Monchau, Banque Syz CIO, always good to chat to you. Thank you so much for coming on Horizons today. Well, coming up, we're going to be talking about Google's parent company, Alphabet, which is borrowing far and wide to finance the unprecedented spending plan behind its artificial intelligence ambitions. Details next. This is Bloomberg. Welcome back to Horizons. I'm Joanna Bersacci in Riyadh today. Well, let's talk about Google. Parent company Alphabet is embarking on a global bond spree, raising $20 billion to fuel the unprecedented spending plan behind its AI push. Joining us from Hong Kong, Jewelers, our Asia Tech correspondent. So there's a lot I want to ask you about this, Annabelle, but one thing that caught my attention is that as part of their issuance, their bond issuance, they're issuing a 100-year sterling-denominated bond. So maybe let's just talk about why they're coming to the market and why they think this is a good time to be issuing bonds also in sterling, such long-dated bonds.
Yeah, such long-dated bonds. I mean, we do see that because, of course, it's still planned issuance, but we actually wouldn't have seen that sort of tenor going all the way back to the dot-com era. So, of course, it's extremely rare to see that sort of offering. But, yes, further issuance is planned in the UK and also in Switzerland at this point in time. But just overnight, what we had as well was $20 billion in a US dollar bond sale. So $20 billion is actually a record for the company as well, and it's $15 billion ahead of what was anticipated. There was a huge amount of investor demand, so subscription was around $100 billion. So it's really interesting because we had the earnings out from big tech last week, and really one of the key takeaways from that was a really big focus on capex across the different hyperscalers and what their spending plans were. Would that be matched by ROI? Part of the concern as well that we saw, because stocks sold off on the news, was also about what would the investor interest be in this sort of bond issuance as well. But that sort of part of the equation seems to have been answered overnight because, as I said, that demand was strong. And of course, Alphabet, as we know, as a business, has very ambitious spending plans this year. They're looking at $185 billion of capex spending, and that would be, for this sort of year, more than the past 3 years combined.
Yeah, and the thing is, it sort of ties into a trend that we're seeing. I remember, a week ago, was it a week or 2 weeks ago, we were talking about Oracle, and there was a lot of concern around their bond issuance, and obviously it was very heavily oversubscribed. Is this just the new norm now, what we can expect out of hyperscalers? So lots of funding coming to the market to finance their capex spending plans. But actually not being punished too much by investors on the debt side of things?
Yeah, well, that's going to be, I guess, one of the key areas to watch. It does seem, for now at least, that yes, investor fears around circular deals and AI bubbles seem to have been sort of assuaged, and investors are really liking, I guess, again, that corporate debt issuance and that demand they're seeing. But it will be really one to track this year, because Morgan Stanley's been looking at the numbers here, and they're saying that hyperscalers are going to be borrowing $400 billion this year. $400 billion, if we get to that, it's a huge increase, more than double of what we had in 2025, which was $165 billion. So it could actually take overall high-grade debt issuance to a record $2.25 trillion. So there are some question marks, of course, around how much that is going to be pushing corporate bond spread wider. You know, are there any concerns around concentration risk? Are we vulnerable here to corrections in AI ecosystem valuations? I mean, lots of things we don't know. We just know that we're coming in, valuations look rich, and will that be sustained?
Yeah. Annabelle Jewelers, thank you so much for bringing us the latest on the potential issuance to come out of Alphabet. And now look at some of the other stories that we're following today. The U.S. is warning American flagships to stay as far as possible from Iranian waters when navigating the Strait of Hormuz. In a maritime advisory, the U.S. says Iranian forces have attempted to force commercial vessels into their territorial waters as recently as February the 3rd. The warning comes after diplomatic talks in Oman, described by both sides as positive. Qatar Energy is pushing the start of its liquefied natural gas LNG expansion project towards the end of the year. The company told stakeholders and buyers that production from the North Field East facility will begin in the fourth quarter instead of earlier plans for the third quarter. Qatar's project is part of a record wave of new supply set to flood the market through to the rest of the decade. Clear Channel Outdoor has agreed to be acquired by investors led by Mubadala Capital in an all-cash transaction that values the billboard company at $6.2 billion, including debt. Mubadala Capital and its partners will pay $2.43 a share for Clear Channel, which is an 11% premium over the company's Monday closing price. The transaction is expected to close by the end of the third quarter. And up next, the IMF's Managing Director, Kristalina Georgieva, explains why she doesn't see a change in the role of the dollar anytime soon. More from our interview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Riyadh today. Well, the IMF Managing Director, Kristalina Georgieva, has downplayed the dollar's decline over the last year. Now, speaking to me at the Emerging Market Conference in Saudi Arabia in Al Ula, Georgieva said the U.S. currency should retain its preeminent position.
We should not get carried away by short-term variations of the exchange rate of the dollar, and we should look closely as to why the dollar plays such an important role in the international monetary system. First, over time, we have seen the dollar going up and down, and actually the dollar being somewhat down now is good for many emerging markets. Those that borrow in dollars now have to pay a bit less. But also what we know is that the reason the dollar plays such an important role is the depth and liquidity of capital markets in the United States, the size of the economy, the entrepreneurial spirit of the US. So I don't see a change in the role of the dollar in any time soon.
Okay, so you don't see that changing anytime soon. The other, I was just watching the panel now with His Excellency Mr. Jadaan, and he mentioned that markets can be brutal, particularly when it comes to economy spending plans, and fiscal and rebuilding fiscal buffers is another big narrative that has emerged out of this conference. Do you think that countries are taking this seriously enough, especially when, again, investors are tending to punish countries that seem to be overborrowing right now?
Well, countries better take it seriously. What has happened over the last couple of years is COVID, the war in Ukraine, they all led to government spending more to support businesses and households, rightly so, at that time. But what is the result? Fiscal buffers almost everywhere are depleted, and shocks are still to come. Therefore, what we say to everybody, to advanced economies, to emerging markets and developing economies, is now is somewhat better time. We have seen the world economy quite resilient to these shocks. Please concentrate on rebuilding these buffers. You need to have a medium-term prospect for how your fiscal position can be strengthened to withstand the shocks that inevitably will come. How are governments doing? Some better than others.
Yeah.
And I can tell you where I'm particularly concerned is for vulnerable middle-income, low-income countries that are particularly stretched today. So what we want is not only for them to do the right thing, but also for the world to be mindful of these countries. We have seen development assistance going down. Well, we have a responsibility for stability and security in the world. Help these countries.
Well, that was the IMF Managing Director, Kristalina Georgieva, speaking to me at the Al Ula conference in Saudi Arabia. And you can explore live streaming news and interviews, as well as all Bloomberg TV shows, documentaries, reporter analysis, and more in one place. Check it out at bloomberg.com/videos. That's our new video hub. Now for a look at some of the other stories that we are following today. Keir Starmer's cabinet members have voiced their support for the UK Prime Minister, buying him time to shore up his premiership. The support came after Scottish Labour leader Anna Sarwar urged Starmer to quit, as well as wider calls to the Prime Minister's resignation over his decision to appoint Peter Mandelson as Britain's ambassador to the US, despite Mandelson's ties to Jeffrey Epstein. Axios is reporting U.S. President Donald Trump is opposed to Israel annexing the West Bank. It's citing a White House official saying a stable West Bank keeps Israel secure and is in line with this administration's goal to achieve peace in the region. It comes as Israel's security cabinet takes actions to deepen control over the West Bank. And let's take a look at how markets are faring up today, because what we are seeing is green on the screen. Well, actually not anymore. We've dipped a little bit. We were stabilizing. S&P futures now dipping into slightly red. NASDAQ down about 14 basis points. But the theme of the last couple of days has most certainly been one of a rebound, particularly in the tech space and in those most shorted stocks. But coming up, metal prices also stabilizing after an exceptionally volatile week. We'll be speaking to Tawanda Madondo from Absa CIB next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa, our top stories this morning. Fresh highs. Asian stocks extend their rally to a fresh record as a rebound in tech gathers pace. And Alphabet borrows big. The Google parent raises $20 billion in a U.S. bond sale as part of a global fundraise for its AI spending plans. And we speak to the CFO of telecoms company Du after reported next income for the full year beating estimates. Well, it's just gone 9:30 a.m. across the Emirates. It is 8:30 a.m. over here in Riyadh. I'm Joanna Versace. Let's take a look at how these markets are faring. And what we're seeing is a strong handover from Asia. The MSCI in the green, very much so, up 1.2%. And again, we're building on those gains from yesterday. The Nikkei reaching an all-time fresh record. And once again, we're seeing a rebound in those tech names. So building on from the momentum of the U.S., we were talking about it earlier, the fact that there is a bit of a short squeeze going on. So the non-profitable tech basket that's tracked by Goldman Sachs has actually seen a bit of a squeeze upwards in the last couple of days and really speaks to the difficulty of shorting in this market. U.S. futures trading sideways. We're just shy of 7,000. And U.S. jobs data is going to be in focus tomorrow, so keep an eye out on that. That's happening on Wednesday. Geopolitics also in focus. Brent is trading shy of $69 here, a little bit below. And again, a lot of focus on the developments in the region. Israeli Prime Minister Netanyahu is scheduled to meet with President Trump once again. That is happening tomorrow. And no doubt the Iran file is going to be on the agenda there. So we'll see whether from the U.S. administration's perspective, this actually pushes them closer towards military action or further down the path of diplomatic discussions. So again, a big focus for oil markets there. And then gold, you can see stabilizing today, down about a 0.7%, which is not that much in the context of most recent moves and how volatile gold and silver have been, but gold is stabilizing at $5,000. And let's switch over. And also, I just want to draw your attention to another big story. We're going to talk about that in just a moment. But before we get to that, what I do want to point out is the strength in the Chinese currency. So you can see that we keep actually strengthening, the yuan keeps strengthening versus the USD. The trend seems to be accelerating. And of course, the latest news is that Chinese regulators have advised financial institutions to rein in their holdings of US Treasuries. So let's talk about that story. Citing concerns over concentration risks and market volatility. So let's bring in our China correspondent, Min Lo. Do we know the target scale and the timing of this move vis-a-vis what the authorities have announced?
Yeah, we're not quite sure about the scale, but the timing came in recent weeks. We understand from sources that Chinese regulators have been quietly, verbally asking some of the big banks to reduce their purchases of US Treasuries or trim their positions. And this reflects some of the concerns there about whether or not Treasuries are still the safe haven asset that it used to be, especially given the dollar slide that we have been seeing particularly pronounced in January. That continues today as well, especially after Donald Trump has said he's comfortable with a weaker dollar. Perhaps the timing could be tactical as well, over expectations that Kevin Walsh has a more hawkish stance, so that could impact rate cut trajectory as well. And of course, the mounting fiscal risks as well. But if you look at the longer term, actually China has already been trimming its position or its holding of US Treasury for a long time, for over a decade. We're now at 2008 lows. And so some analysts are saying maybe we shouldn't be reading too much into this, although there's another camp that is saying we are seeing the market moves, and so perhaps this could potentially snowball and push US yields higher in the longer term.
What is the impact, Min? What's the likely impact going to be on Chinese banks here?
Yeah, so because China has already been cutting its holdings of US Treasury for a long time, if you look at the top 4 lenders in China, their holdings of US dollar denominated bonds is about $370 billion, and that comes up to just over 5% of their total bond holdings, or just 1.5% of their total assets. So all in all, pretty small. So the impact is going to be quite insignificant for them when they de-risk. But I think our Bloomberg economics team has a very interesting take. They forecast that China will continue to reduce their holdings of US dollar assets by 60%. In 2050, compared to starting from compared to 2024, and they are looking at this as a shift in global structural shifts in terms of trade flows. If you look at U.S. share of global GDP, you look at the role of US dollar in cross-border transactions for China as well. This could be part of China's long-term strategy to diversify away from the U.S. They're not dumping those shares; they're gradually reducing holdings. So this suggests perhaps it's not so much a geopolitical maneuver here.
Or perhaps it's not active selling, it's just a reallocation of bonds that are coming due. So interesting to keep an eye on. Right. And also the move in the yuan also stands out as well. Min Lo, thank you so much for bringing us that story. Well, metal prices are stabilizing after an exceptionally volatile couple of weeks. Gold under a little bit of pressure today after 2 days of gains as investors take profits in a choppy market that's still trying to find a floor following a historic rout. For more, we're now joined by Bloomberg's Jennifer Zabazaja, who is standing by with a guest who can shed more light on what exactly is happening in this space. Jen.
Yeah, that's right, Jumana. With me now is Tawanda Madondo. He is a senior banker in the resources and energy sector at Absa CIB, who's been attending Mining Indaba here in Cape Town for quite some time. And as Jumana was just saying, Tawanda, thanks so much for being here. It's been quite a choppy market for precious metals, also for PGMs more broadly, providing quite a bit of a backdrop to this Mining Indaba. I wonder if you take a look at the thematic drivers of what we have seen with precious metals in the previous sessions, and you think that there's room for a sustained rally, or your expectation is potentially we'll see a pullback in the near term?
Yeah, so thanks very much for having me. I think really the key themes for me is, it has been choppy, but I think, we have what I would call probably a structural shift upwards within the precious metals, minerals, gold, silver, and all those things. And really, this is really being driven by key fundamentals. I think, one of the big ones is the natural geopolitical impasse, which we've been having. I think the second thing really is the movement away from US Treasuries more into gold as a reserve currency, and we expect this and other things to really fundamentally hold the price of these precious metals going forward. Yeah.
Well, let's stick on gold, because we were hearing from our colleague Min Min Lo, who was talking about what we're seeing at least out of China, reportedly. How much is that potentially playing into the gold price at this point? Because we are seeing gold stabilizing a bit today, but what does that mean maybe moving forward? What we heard from that Bloomberg reporting. Yeah.
So I think everybody says China, but I think it's a lot of other central banks buying. I think that the last report I was reading is China's pretty much been flat in terms of their buying of these precious metals, and you've got a lot of other countries which have pivoted away and are beginning to stock up quite aggressively on these precious metals. Yeah.
Are we seeing any of this translating into any of the African economies? Of course, Ghana is a major gold producer, but where are we seeing potentially some benefits for African producers, especially as we talk here at Mining Indaba, when a lot of the discussion is around beneficiation of some of the trade right now?
Yeah, so I think I was saying to somebody, this time is Africa's time, right? I mean, we are, I think, on the precipice of quite a sustained super cycle on a commodities basis, and I think what we do need to do is this time make sure that we capitalize on this. We are seeing quite a lot of new projects coming to fruition. Just this Mining Indaba, probably over the last year, been very involved in discussions, not just gold, but copper projects and various rare earth projects on the continent. And I think we just need to make sure that this time around we do bank these projects and get into production. Interestingly enough, Africa has 30% of the resources in the world, right? So with the geopolitical shift, I think we can use this moment in time to leverage that to our benefit, and become not just an exporter of raw materials, but also force beneficiation.
What does that look like, though, especially when you have countries like the US at the table and many other countries trying to play their own resource nationalism and trying to get the best bang for their buck? What does that look like when you're advising your clients?
From our perspective, we're a bank, right? So I think it makes the projects more bankable in terms of, this current period has led to prices which we think are higher, and we think that these prices will be sustainable going forward. So it makes the projects a lot easier to bank. Yeah.
Do you see that translating into other precious metals? We talked gold, we talked copper. What is the long-term outlook that you have?
I think it really goes into all the critical minerals, right? Whether it's be copper, whether it be cobalt, whether it be PGMs, So I think it's quite a broad basket of commodities which are having this positive impact or being positively impacted by this.
All right, we'll leave it there with you. Thanks so much, Tawanda Madondo, joining us from Absa CIB here in Cape Town. Jumana?
Bloomberg's Jennifer Zabasajan. Tawanda Madondo, senior banker in the resources area and energy sector at Absa CIB. Thank you so much. Well, coming up, we speak to Ben Hamida, CFO of UAE telecoms provider Du, as it reports earnings. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Riyadh today. Well, UAE telecom provider DO, the full-year profit has beaten the average analyst estimate. Net income came in at 2.9 billion dirhams. That is an almost 17% jump year on year. I'm really happy to say that joining us now is Ben Hamida, the CFO of DO. So we're talking about a big net profit jump, a beat versus expectations. I also see revenue as well as up almost 9% year on year. What are the factors driving this jump in both revenue and bottom line, and can the momentum actually continue into 2026?
Good morning, Jumana. Great to be with you today. I think it's in one word, disciplined execution. I mean, we've been delivering, as you said, 8.7% revenue growth, 13.4% EBITDA growth, expanding our margin by 1.9 points, 16.8% net growth, net profit growth, and 14.4% free cash flow growth, while at the same time continuing to fund growth and adjacencies to our core business, which is the telecom, and returning money to the shareholders. This is not a one-off. It's a continuation of several years where we've been delivering this profitable growth. It reflects the strength of our core connectivity business and the scaling of the agencies that we have.
Looking at your subscriber numbers, mobile subscribers have increased to 9.7 million versus 8.9 million at the end of 2024. What is your strategy to keep that growth going, especially in an environment that's become quite competitive in your space, and where also you could say that we're getting to a point of perhaps saturation maybe in mobile and fixed networks?
I would not call it saturation. I will frame it more as a very mature market. The UAE is extremely advanced and mature. We have a penetration more than 200% when we talk about mobile, 99% when we talk about fiber. However, we're in an environment where population continue growing, in an environment where tourism is extremely active, and we're also have been gaining market share through innovative offers, through stimulation of usage, and through customer value management. All of these factors will continue driving our growth despite the fact of this level of maturity in our market.
Yeah, data centers, very topical. I'm curious to see what plans you have in that space and what sort of you envisage in terms of capacity build out there.
Data center is a sector where we believe there is a huge potential, in particular when we talk about sovereign and government and large corporates offers. We were well positioned to act into this sector. We have access to land, we have access to energy, we have access to capital. This is an area of growth, and 2025 has been a year where we have engaged strongly from a capital deployment perspective. As you have seen, our capex increased slightly in terms of capital intensity. This is an area we will continue developing and is one of our priorities outside the core business because of its importance, the synergies that it brings to our telecom business, and its importance to build the backbone for the country in terms of infrastructure and digital infrastructure.
Yeah, do you think telecom operators stand to benefit from the huge amount of interest in data centers and sort of the outlook for demand there?
Look, I think it depends on each country, it depends on each player. As far as we're concerned, we believe this is an area where we have differentiating factor, we have a role to play, and we've been active into this sector since 2017. So it's not something new to us, and it's not necessarily the AI hype that is driving us there. I think the AI is catalyzing and accelerating further the demand that we're here to serve.
Yeah, well, the last time we spoke, I think you had just completed your secondary sale offering, and there was a view, obviously, at the time that it would bring liquidity into the stock, but also potentially open up the MSCI inclusion. Has there been any updates on that front?
Absolutely. I think the transaction has been extremely successful, and it achieved the main objectives. The first one being the increase of the free flow. The second one is the increase of the liquidity that you've talked about. The third is the diversification of the shareholder base, where we have an extremely high level of attraction from international investors. As you know, the MSCI is a process that takes 4 consecutive quarters. So we've been satisfying the main criteria of the MSCI for 2 consecutive quarters for now, and we continue working in order to fulfill the criteria for the next 2 consecutive quarters. So this is something that will come out hopefully at the end of Q2 2026.
All right, sir, thank you so much for your time. Ben Hamida, CFO of DO on the day of earnings. Really appreciate chatting to you. Well, coming up, we're going to take a look at Africa's mining sector and the policy choices shaping its future. We'll get you our conversation with the International Mining and Metals Council President next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersechi in Riyadh today. Well, Zambia says construction will begin this year on its biggest rail project, linking its copper mining region to Angola's Lobito port. The US and the European Union have cast the railway project as a flagship initiative to counter China's growing influence in Africa while securing access to critical minerals. Zambian president acknowledged progress has been slow, saying it takes time to move past talk shops and to focus on implementation. The U.S. Angola says it expects mining giant BHP to return to the country this year after a 2-decade hiatus. The country's minerals and petroleum minister said the mining giant has shown strong interest as Angola carried out sweeping reforms aimed at improving transparency. And the U.S. says it convened rare talks with rivals Morocco and Algeria over the fate of the Western Sahara. The meeting in Madrid included Mauritania, the Polisario Front, and UN officials, and focused on implementing a recent UN Security Council resolution. The U.S. did not give further details as the Trump administration tries to resolve one of Africa's longest-running territorial disputes. And the International Council on Mining and Metals says African countries would be making a mistake if they embrace resource nationalism. The council president spoke to Bloomberg's Jennifer Zabazaja on the sidelines of the Investing in African Mining in Daba and told her Chinese influence could help support the potential growth of Africa's mining industry.
The US and China and Europe as a third player offer really important opportunities for the continent to choose which they want to work with without necessarily that having to be mutually exclusive. So you can work with the US and the EU and China in different ways. And the bargaining position for African governments has arguably never been greater, because now you have a choice of counterparties. Previously, when the US and the EU were not as present on the continent, you really only had China to work with. But now you can play China off the US, off the EU. And we saw from the Germans a very clear statement that said after decades of talking and sending delegations, we're sending engineers and we're sending capital. Now that is what African governments have been wanting for a long time, saying enough talk, show us what you're really willing to do to support the sector. And I would say that today is the most optimistic I've ever felt about African mining.
Where does the leverage sit, though? Is it on some of these bigger economies? Is it on the producers? Is it on the corporates?
Well, the leverage sits underground. Ultimately, the resource base and how rich it is in the continent is our main aspect that we can be using to get the best deals for Africa. Now, that leverage is shared between companies who may hold the rights to minerals or certainly hold the technical expertise, and governments who are the main interlocutors with their counterparties in the United States. Now, and the EU, for example. Now, what we are seeing is a better level of government-to-government collaboration on the continent than we've ever seen before. This year, for the first time, I have seen a maturing of the conversation on beneficiation. Up until now, basically every African government has said, we want everything from mining to refining to smelting to final production in our own boundaries. Finally, people have realized that's not practical. And so we're starting to talk about, well, if mining happens here, can refining happen in a neighboring country, and can final assembly happen in a third country? That's really positive, because that's a much more sustainable way to go than everyone insisting on having all the value chain in their country.
But that still doesn't mean resource nationalism will go away, not just on the continent, But globally, I mean, even in the US, we're seeing President Trump trying to do the same. I mean, where does that fit into this dialogue?
That is the big risk, especially on something like gold, where people are seeing sky-high prices and saying, oh gosh, maybe this asset needs to sit all in government hands and maybe we need to renegotiate contracts. It would be a huge mistake, a huge own goal on the part of countries on the continent if they were to try and use this moment to radically reshape the sector by tearing up contracts, by arbitrary tax demands, by changing the way agreements have been set up, because that will be the signal to international investors that risk is too high and they will put their money elsewhere. So I really would guard against anybody thinking that this is the moment to arbitrarily change. It doesn't mean that you can't have a grown-up discussion about the fairest way to share the profits, but it does mean you've got to be very clear-eyed that the excitement we're seeing around critical minerals today will not automatically translate to dollars in your country unless the environment is conducive for it.
Well, that was the International Metals and Mining Council President, Rohitesh Dhawan, speaking to Bloomberg's Jennifer Zabazaja. And before we head out, let's take another look at how markets are faring. That strong handover from Asia. Now, futures have tilted towards the green. They were red a short while ago, but essentially flattish. As you can see, handover strong. And we continue to see that short squeeze go on in some of the stocks that got heavily hit last week, particularly in the software space and in those most shorted tech stocks. But that is it for our show, Horizons Middle East and Africa. I'm Jumana Bersachi in Riyadh, back in Dubai tomorrow. Stay with us for Daybreak Europe. This is Bloomberg.